What is happening in the crypto world right now? The markets are electric, the news is breaking faster than ever, and you need to know what's moving the needle. Get ready, because Bitcoin Bulletin is dropping the hottest updates you won't find anywhere else. We've got the inside scoop on major corporate plays, market shifts that have everyone talking, and strategic moves that could redefine the landscape. Buckle up, because this is the information you've been waiting for, delivered with the energy you crave. We're diving deep into the stories that matter, so you can stay ahead of the curve. From massive financial approvals to surprising market bounces, we're covering it all with the speed and intensity you expect. Don't miss a single second of this action-packed episode. We're kicking things off with a massive development from a Japanese firm that's making bold moves in the crypto space. They've just secured a huge shareholder approval for a massive capital raise, all focused on accumulating more of the digital gold. This could significantly change their position in the market and how they operate going forward. Then, we're analyzing the market's surprising comeback. After a sustained downturn, key players like Bitcoin, XRP, and Solana are showing renewed strength. We'll break down the macroeconomic factors and on-chain metrics experts are pointing to as the driving force behind this potential pivot. And if that wasn't enough, we're looking at a major player doubling down, buying the dip with a significant acquisition. Plus, we'll explore the latest on market trends and what investors need to know as summer winds down. Make sure you hit that subscribe button and ring the notification bell so you never miss an update. A Japanese firm makes a bold Bitcoin bet. This Japanese company is making waves by securing a massive shareholder approval that could significantly boost its Bitcoin holdings. They've received the green light to issue preferred shares, aiming to raise a staggering yen 555 billion, which translates to approximately $3.7 billion. This strategic move is all about accelerating their accumulation of Bitcoin, with ambitious targets to quintuple their current holdings to a colossal 100,000 coins by 2026. They're not stopping there, with a long-term vision to reach 210,000 by the end of 2027. The company has implemented a dual-class share structure to achieve this. Class A shares will offer fixed dividends designed to attract investors seeking a more stable income stream. Complementing these are Class B shares, which provide the potential for conversion into common stock, giving holders a stake in the company's success as it aggressively pursues its Bitcoin acquisition strategy. This innovative approach is intended to attract a diverse investor base while carefully managing potential dilution for existing shareholders. It's a sophisticated financial maneuver designed to fuel their core objective, amassing significant amounts of Bitcoin. This isn't just a hypothetical plan. The company is already a substantial player in the corporate Bitcoin landscape. They currently hold approximately 20,000 coins, valued at around $2.2 billion, making them the sixth largest corporate holder of Bitcoin globally. This capital raise is crucial for them to maintain their competitive edge and continue expanding their presence in the institutional crypto markets. Despite recent share price volatility, including a 55% drop from its June peak and temporary suspensions of certain warrant agreements, the company's commitment to its Bitcoin-centric strategy remains unwavering. These adjustments appear to be part of a broader effort to streamline their capital structure and prioritize the acquisition of Bitcoin. The shareholder approval marks a significant step in overcoming internal hurdles, paving the way for the company to finalize issuance terms and secure the necessary regulatory approvals to proceed with this substantial funding round. This bold move sets the stage for significant market activity. Stay tuned as we break down the factors driving the crypto market's surprising rebound. Crypto market rebounds. Bitcoin, XRP, and Solana lead the charge. After a period of sustained downtrend since mid-August, the cryptocurrency market is showing signs of a significant rebound, with Bitcoin, XRP, and Solana leading the charge with gains of at least 2%. Experts are attributing this resurgence to a confluence of improving macroeconomic conditions and positive on-chain metrics, suggesting a potential pivot from the recent bearish sentiment. Bitcoin, while only up slightly on the week by about 1%, has managed to climb back above the $111,000 mark, a level not seen since the previous Friday. Solana, however, has posted a more impressive weekly gain of over 7%, indicating strong momentum. While other major cryptocurrencies like Ethereum, Dogecoin, and BNB are showing slight declines on the day, the overall market sentiment appears to be shifting towards a more optimistic outlook. Analysts are pointing to several key factors driving this recovery. The depreciation of the US dollar is seen as a significant catalyst, bolstering risk-on sentiment and encouraging capital flows into assets like cryptocurrencies. This trend is further amplified by macroeconomic factors, with markets increasingly anticipating Federal Reserve rate cuts expected in September 2025. Such cuts would reduce the opportunity cost of holding non-yielding assets like cryptocurrencies, making them more attractive to investors. On-chain data also supports this bullish narrative. Declining Bitcoin exchange reserves, a slip in BTC dominance, and evidence of long-term holders accumulating Ethereum are all reinforcing the positive sentiment. Verified analysts note that the net taker volume has turned positive, indicating that traders are leaning towards a short-term upside. The recent uptick in Bitcoin's open interest, coupled with a negative 7-day change, suggests a liquidation of positions, which has historically been followed by positive market reactions. This is being characterized as conviction-driven positioning rather than speculative excess, with notable examples like Metaplanet's recent acquisition of 1,000 BTC underscoring this data-backed conviction. The overwhelming expectation of a Federal Reserve rate cut on September 17, with the CME's FedWatch tool showing a 91.8% probability of a 25 basis point cut, further solidifies market conviction. However, analysts caution that this sentiment might reflect reactive futures pricing rather than a complete understanding of the Fed's decision-making. The upcoming non-farm payrolls report is highlighted as a crucial test for this optimistic outlook. A report falling within the 90K–120K range would validate a cooling labor market and almost guarantee a rate cut, likely pushing Bitcoin higher. Conversely, a report exceeding 150K or showing tariff-driven wage pressures could prompt the Fed to adopt a more hawkish stance, potentially causing Bitcoin to revisit the $104,000–$106,000 range and leading to significant liquidations. The market's current overconfidence is a key concern, as the Fed could deliver a hawkish message even with a rate cut, creating volatility for those anticipating a more dovish policy. While the market shows resilience, a key economic report looms. Now, let's look at another major company doubling down on Bitcoin amidst the dip. Strategy Inc. buys the Bitcoin dip, acquires over 4,000 BTC. In a decisive move that signals strong conviction in the cryptocurrency's long-term value, business intelligence and software firm Strategy Inc. has actively bought the recent Bitcoin dip. Instead of exiting the market during a price downturn, the company has acquired an additional 4,048 Bitcoin for approximately $449.3 million. This strategic purchase brings the firm's total Bitcoin holdings to an impressive 636,505 BTC, a portfolio now valued at over $69 billion. The acquisition, detailed in an 8K filing with the U.S. Securities and Exchange Commission, SEC, on September 2, 2025, occurred between August 26 and September 1, 2025. During this period, each Bitcoin was purchased at an average price of $110,981. This recent influx of Bitcoin contributes to the company's already substantial holdings, which were acquired at an average cost of around $73,765 per Bitcoin, totaling approximately $47 billion when including fees and expenses. Michael Saylor, the company's founder and a prominent Bitcoin advocate, highlighted that the firm has achieved a year-to-date 2025 Bitcoin yield of 25.7%. Strategy Inc. funded this latest acquisition through the proceeds from at-the-market sales of its various stock classes. Specifically, the company offloaded 1,237,000 shares of its Class A common stock, MSTR, for $425.3 million, with substantial amounts still available for future sale under that program. Additionally, it sold 199,509 shares of perpetual strike preferred stock, SDRK, for approximately $19 million, $237,931 shares of perpetual strike preferred stock, SDRF, for $26.5 million, and 12,973 shares of perpetual strike preferred stock, SDRD, for $1 million. These sales generated the capital necessary for the significant Bitcoin purchase. With its current holdings, Strategy's Bitcoin portfolio represents over 3% of the flagship cryptocurrency's total 21 million supply. The company's long-term objective is to hold approximately 7% of the total Bitcoin supply. Michael Saylor has consistently expressed his confidence in Bitcoin, referring to it as digital capital and a 50-year asset. He has also hinted at the possibility of further acquisitions, recently stating on social media that Bitcoin is still on sale. While the frequency of Strategy's Bitcoin purchases has appeared to slow down compared to past periods, there has been no indication of the company planning to sell its existing holdings. Just last week, Strategy announced a purchase of 3,081 BTC for $357 million, which temporarily brought its total holdings to 632,457 BTC before the latest acquisition. In that instance, the company paid an average price of $115,829 per coin. This aggressive accumulation strategy continues to shape the market. But what does the broader crypto market outlook look like as summer ends? Crypto market faces downturn. Bitcoin, Ethereum, XRP decline. As summer draws to a close, the cryptocurrency market is experiencing a notable downturn, with major assets like Bitcoin, Ethereum, and XRP falling significantly from their July highs. This decline has sparked questions among investors about the future trajectory of the crypto market, prompting a closer look at the underlying factors contributing to the slump. The primary reason cited for the recent price drops is the evolving stance of the Federal Reserve and its monetary policy. Heading into August, market expectations leaned towards the Fed lowering interest rates in the fall, a move anticipated to cushion the U.S. economy against potential negative impacts from tariffs. However, recent inflation data has come in hotter than expected, potentially limiting the Fed's ability to implement substantial rate cuts. Compounding this uncertainty is the ongoing tension between the White House and the Federal Reserve, which participants worry could influence future interest rate decisions. Historically, a low interest rate environment has been highly beneficial for the crypto market. Lower rates reduce the opportunity cost of investing in speculative assets like cryptocurrencies, making them more attractive. The previous crypto boom, experienced from 2020 to 2021, was significantly fueled by a near-zero interest rate policy. Therefore, any indication of future rate cuts is typically met with positive sentiment from crypto investors. Another significant trend influencing the market is the rise of the crypto treasury company model, pioneered by firms like Strategy Inc. This strategy involves aggressively acquiring vast amounts of a specific cryptocurrency, such as Bitcoin, with the aim of transforming the company's market perception and performance. While initially innovative, this model is now being adopted across various cryptocurrencies, including Ethereum and XRP. However, some analysts view this trend as potentially indicative of a speculative bubble, inflated by the involvement of major players and substantial capital inflows. Currently, the crypto market is actively searching for new catalysts to drive prices upward. Lower interest rates remain a potential short-term driver. Additionally, new crypto legislation that facilitates broader institutional adoption could provide a significant boost. A more impactful catalyst, however, might be a notable cryptocurrency initiative from the Trump administration, such as the proposed establishment of a strategic Bitcoin reserve. While plans for a budget-neutral approach are being explored, with potential funding sources like DOGE spending cuts or tariff revenue gains discussed. Treasury Secretary Scott Bessent recently suggested that any significant government Bitcoin acquisition is unlikely before 2026. Despite these uncertainties, some analysts predict a rotation into riskier cryptocurrencies as investors seek higher potential returns. This trend could sustain the crypto market through at least the first quarter of 2026. However, given that cryptocurrencies often follow four-year cycles, and the current cycle is nearing its end, investors are being advised to consider rebalancing or diversifying their portfolios to prepare for potentially more challenging market conditions ahead. Economic indicators and policy decisions are key to future market movements. Now, let's wrap up with a quick recap of all the top stories. And that's a wrap on today's essential crypto updates. We saw a Japanese firm making a massive $3.7 billion bet on Bitcoin accumulation. We analyzed the market's surprising rebound, with Bitcoin, XRP, and Solana leading the charge. We highlighted Strategy Inc.'s bold move to buy the Bitcoin dip, adding thousands more coins to their vast holdings. And we broke down why Bitcoin, Ethereum, and XRP are currently facing a downturn, with a look at the economic factors at play. Don't forget to smash that like button if you found this valuable, subscribe for more daily crypto insights, and ring that notification bell so you never miss a beat. Also, hit us up in the comments with your thoughts and follow us on all social media platforms for real-time updates. We'll see you in the next one.